Hello there, and welcome to my channel Simply Stocks. And today I'm going to talk about IG Petrochem, which is on an upswing. So let's understand about the company and let's understand what you need to do. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about IG Petrochem, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. Help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from day to day. For detailed market or company talk that you want to have, you can directly email me and we can work things out. Now about IG Petrochem, established in 1992, it provides various chemical products, has global reach and provides products to Europe, US and other parts of the world. Phthalic anhydride is a major product of the company, and it is in real demand over the last couple of years, and the prices have been surging, and this is the main reason why the stock is surging as well. Currently trading at around 8-9 times earnings, which is not that expensive, but then you need to understand that most of the chemical companies do trade around these levels. They are not like your consumption companies which trade at 40, 50, 60 times. What are the key advantages of the company? One of the lowest cost producers. So the cost and operational efficiency of the company is top class, and that's where they bring in high profitability and very good numbers on the bottom line compared to the top line. And that's where you can say investors like the company, because most of the times the EPS and profit growth is seen, although the top line growth is not that great. The plant location is strategically placed, so what happens is they are not spending a lot on transportation, on oil consumption, etc. And due to that, that is from the raw material place to the plant, and due to that they are also you can say saving on cost. The clientele is strong, and the global clientele is available there with pharmaceutical companies, with other consumption companies, consumer companies globally and in India, and that is getting stronger by the year. High capacity utilization, and as we have seen, as I have mentioned, that the demand is increasing, so capacity utilization is increasing over the last 2 3 years, with demand dipping from China. That has also helped, and a slight amount of, you can say, business is also coming to these companies, and hence capacity utilization has increased, and our recovery processes which are much better than other companies, and that has led to bringing in more operational efficiency, better numbers on the top and bottom line. Looking at the stock performance, so it is down from 50% from the peak of 2018. So 2018 saw a real surge in mid and small cap. So these such kind of stocks are still down. So we could see that over the next 3 to 6 months, the stock could surge even more. It trades at around 40-45 times earnings, which looks expensive for the time being, but you have to take into account that the numbers of FY20 were less, so that's why it looks like it is around 42 times. Otherwise it trades at 8 or 10 times earnings. So let FY22 earnings come in, and probably it will trade around 8 to 10 times earnings. Demand for its products have increased recently, as I mentioned, and it looks like it could be sustainable for 2 3 quarters at least, for 2021, for this calendar year, and hence the stock may still do well. But you need to understand that most of the chemical companies trade between 8 to 10 times max, and it is extremely difficult for them to trade at 15, 18, 20 times, which is a norm for IT companies, etc. So in that regard, slightly expensive the stock is. The market cap of the company is right now 1400 crores. Numbers are improving and improving sharply, and that's why the stock is surging. Promoter holding is high, so that's a big positive for the stock. So what is the current situation? Demand for phthalic anhydride has surged post March. So that has happened because of the lot of chemicals, sanitizers, etc. that are being made and produced and in demand. probably it will die down by the end of this year. So I don't see that the pandemic will eradicate totally, at least till the end of 2021. So the demand will remain robust, although it will die down compared to what it was in April, May of last year, but still there will be a robust demand for its products. Some of the demand from China has shifted that I have just mentioned, and that has led to more business coming to you can say IG Petrochem, and prices of their products has increased as well. So with although raw material cost has increased, but they have increased prices even more than the increase in raw material cost. We have seen that oil prices have surged over the past 1 month or so, and right now oil is around 86, 87 rupees a liter, compared to probably 20% less about 2 3 months back. But you need to understand that the company has also increased prices of its products more, so that has meant that margins have improved. It has surged 5 6x already, so it's around 500 480, around about that, from 80 100 80 70 80 rupees. But you so that is why I believe that the stock is slightly expensive and probably may consolidate. But the growth looks sustainable for at least a year, if not couple of years, for at least 1 year. I feel that the growth numbers would be there, not as good as last year, but the numbers would be very robust this year as well. So what needs to be done? After looking at it, you might be confused as to what to do, because at one hand I'm saying that the stock is expensive. On the other hand, I'm saying that the growth may continue. I would still avoid. If the stock was up 3 4x, I would have looked at it. Since the stock has already surged 7 8x from the lows, I think the growth for 1 or 1.5 years is already priced in, and you never know when the prices turn around. So this is like a commodity kind of a stock. So if prices of their either products dive down, demand slightly declines, or on the other hand, if the prices of their raw materials surge, then you will see a dent in the bottom line, and that will hurt the numbers. And the stock is already trading at very rich valuations, as I have just explained. In that regard, I feel that any 20 25% decline, if that happens, and that the numbers are still good, and the stock has declined around 25%, is closer to its you can say moving averages, that's where you can buy the stock. Otherwise, if you are having it, you're making good amount of money, 50 60%, or even more than that, or slightly less than that, probably it's time to book profits and look for other sectors, other companies. Especially I stay away from anything that is commodity type. So this is like a commodity type of stock. So probably do not overstay. If you have bought the stock, keep a 15 20% stop loss. And if you make good amount of money, so if you have a 20% stop loss, you make 50 to 60%, probably take profits off. That would be the suggestion here. And have strict targets and timelines in mind. So keep track of the raw material cost, product cost, etc. And that is where I feel that a retail investor may fall behind, because you have to look at a lot of things and a lot of variables when you're buying into any commodity type of stock. So be careful in this and invest wisely. So this was my video on IG Petrochem. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.